And we are live. Hi everybody, welcome in. In this video, I'm going to go over how to get a business loan with good credit without any collateral, without hard credit checks, and even without interest rates. That's right. You're going to want to stick with me until the very end of this, as I'm going to give you all those juicy details on how you can make that possible. But before I get started, if you're watching me here right now on the live, give me a hashtag live. If you will be here on the replay, give me a hashtag replay. I know this is a Saturday, not everybody can make it, but I do want to get on here for a short amount of time, everybody, and talk to you guys about how to make this possible. I have other content that has been released on how to get bad credit business loans with personal FICO credit scores. How could you do all this with business credit? The two, maybe one versus the other, and so forth. So I'm going to give it about a good couple of minutes, and then we're going to go ahead and really get deep into this, but I want to let this room heat up. And in that meantime, what I'm going to cover are just everything A through Z. I know it can be a little differentiated between bad and good credit, and even before that there's bad, fair, good, great, and then excellent. So I'm going to give you some kind of a barometer to look at, and then I'm going to give you some clear examples. But if you're going to be watching this later on YouTube, if it's uploaded there, and you don't know what I do, I come out with all types of small business loans, bad or good, bank, non-bank usually, alternative, online banks, what are those options, private lenders, all these different companies and all these different lenders I can help you get matched with. This is why it's a great thing to come through a broker like myself, who has an influx amount of experience, has personal connections with all these lenders, what they're looking for different industries, what the qualifications are, the underwriting processes, because they're different from service to service. What are the underwriters expecting? What are the lenders wanting? And everything far in between. So if you have not subscribed, you'll want to go ahead and do so again in time. And if you're watching this here on this TikTok, is where I'm currently streaming. I know some of you guys are like, TikTok. If you're watching this on another channel later on, I like to make as much of an impact as I can. And I know I get people here who would love to learn about business loans and so much more. So if you haven't, make sure to subscribe, follow, and also click that bell notification icon so you do not miss any future videos. Now let's get on with this. This is what I wanted to get on here. This is unscripted. This is one of these spur of the moment things, but with a lot of experience on my hands, I'm going to get right into it now. So I want to compare in a way to a bad credit loan. So when you're getting a bad credit loan, this is not what it's about. It's good credit. But what you need to know is the same thing can happen with bad as it could with good credit. It's in the underwriting process, at the beginning stages, in the middle, and towards the end when you're receiving your offer, the contract terms, rates, and everything. What you need to understand is the bulk of the decisions we make on how much funding you can get, right? The outer ring is what I usually talk about, is our outcome. It's our goals. Our goal is to get a certain amount of funding. And if we don't meet that, we usually complain. We say, well, no, I'm on to the next one. Can you offer me this instead? Can you offer me, I actually wanted an extra 10,000. I actually wanted a better amount of months and years. I actually wanted a better type of payment. I wanted everything underneath the sun. And it's just not the reality. So I'm going to start off with that and give you guys the answer that not everything is sunshine and rainbows. Now, the SBAs have programmed us to think that way. The banks have. We want these low interest rates. We want this amount of time, these terms. And we have these huge expectations, right? And so now getting into this, with good credit, we're talking about somewhere between like 670 plus. Some of you guys are like, whoa, I was thinking underneath that. And it's a different scale set, especially with personal and even business credit. So all underwriters, especially the lenders, have a different criteria for what's considered good, what is considered great and excellent, fair, especially bad, and we're getting into that poor range. We have a different system that we look at, and we say, well, in this industry, this is what's actually considered good. We're a few points behind, but look, you have these details are in good shape. This is actually what we want to see here when we look through the bank statements and everything all considered, the history, then we can give you a better answer and give you likely or better funding and match almost, or not even, if not close, give you some other flexibility in between. So good credit can be between a 670, a 739, and I have my laptop in front of me because I have my notes, everyone. I have my notes that I'm looking through. And this is stuff that I've accumulated in like docs that I've put together for myself and through all this experience and what I'm seeing through different examples. But before I even move further on, if you're here right now, give me a wave, give me a thumbs up. If you feel like you're going to get some value out of this, please share this with other people you feel can get help getting alternative business funding. I've already helped out a lot of people today, and it is Saturday, so I'm going out of my way to really help you guys. I found some time. I'm going to be on for a few more, and then we're going to kind of just round up. But you guys can leave me your guys' questions, comments, concerns down below. But I'm going to keep speeding through this, and I'll try to answer them at the end. Now, good credit. You're asking yourself, what doors does that open, right? That would be the first thing on my mind. Like, what doors, what interest rates, what realistically can I get in my payback, interest, terms, payment type, etc. Those are all the thoughts that come into our mind as a business owner. And I don't blame you. We think on this outer shell. We think about what we want as our outcome in terms of funding, what we want to place our standards on interest, what we base it upon, how much we have to pay back in total. And I'm totally on top of that. I get it. When I first started in this world, it wasn't easy for me. I tried to navigate, try to build my business at the same time growing it, and everything wasn't easy because I couldn't get the funds necessary to pump marketing and advertising into it and to do so much more that came with it. It's like that. It's how it felt like. And you're not alone. But what I have to tell you is, with good credit, even at that, doesn't necessarily mean that you will get the best rates, that you will get the best terms, that you will get the best type of funding. So with most services, and it's different upon each one. So a good, again, we're talking about maybe between a 670 and 739, that does open a lot more doors. And what ideally we like to look at is somewhere between a 675, if not better, 700 plus, and 50,000 per month within each of the last 3 months at least, and stronger revenue, stronger cash flow over time, especially that, the amount of deposits, how those bank statements look. Do we have to ask for taxes if you're asking for a lot more in funding? It depends on the service as well. These things can get you more funding. And you have, let me start with services. You have the SBA programs out there. If you're within that 670 range, plus, they accept somewhere between like 680 or so. And each program can be a little bit different. It can vary on the type of funding you get. But that range of 670 plus is a great barometer to start off at. And for sure, it opens up a lot of doors. But what are the services? Again, we have SBA type of loans. We can open the doors for short-term business loans, like short terms in terms of unsecured business term loans and even secured business term loans. Secured term loans are a different subject because you can put some collateral in and it might just decrease the rate if you have something of value enough of what's being asked for to give up. But I don't always recommend 100% doing secured. Unsecured, meaning you don't have to put any collateral, is what a lot of people like to go into. It's one of my number one recommended ways. And a lot of the time, 20% there, so my battery percentage is getting low. I'm doing this on my phone. So unsecured, what I prefer about that is you don't have to put any collateral in, but you will usually be required to put some kind of a personal guarantee. That's what's required. It's okay. You default, personal assets can come and go. And so that's something of a way for lenders to secure their money and say, hey, how do I get it back? What can I do? So that's common. So SBA loans is one, short-term, even medium, even in long-term business loans, you can see in the good range. And we're again talking about kind of in that 670 somewhat bubble when we're fitting that in. And in some criteria, it can be more. It can be like a 700 or just below 690. But it opens your doors up to those short-term business loans. It opens it up to a medium. So short-term meaning 4 to 24 months, sometimes 4 to 6, 4 to 18, 3 to 18. And then it can be a medium term where it's from like 2 to 5 years. And then from a longer term, 5 to 10, 5 to 25 years, right? Or it can be like a 2 to 25. And then that's what you look at. So how you can get a business loan with that, you have, again, those short-term. You have the SBA type of loans. You also have these merchant cash advances. And they're loans, you just got to be careful how you use that word in different states. But loans / cash advances where you can get a lump sum as well. And these are usually based on your credit card transactions and how much receipts you're taking. And are you using credit? Maybe it's credit card processing, right? And then usually it's giving a lump sum and you're taking away a future percentage of your credit card receivables and even debit card sales. So on a low day, maybe you get taken out a little bit. On a higher day of sales, you get taken out more. And so It can fluctuate at times. And then there are hybrid merchant cash advances where they're not taking away a future percentage of your credit card receivables, which is awesome. I prefer these. Generally 50% less expensive. You know what you're getting deducted, and it's usually much more stable. So that's another route to take with good credit. And those also offer bad credit. That's why merchant cash advances are very popular, because they can help those like 450, 500 plus levels of credit. And I have video content on bad credit business loans, so I'll leave that down below in the description for you guys to watch. And one also thing to do, if you guys are watching here on TikTok and later watching on YouTube, you guys can visit the bio or the description, and I have free resources for you, one of which you can get a free 6-step pre-approval lending checklist that will walk you through step by step what you must know before you walk into an application with 110% confidence and certainty that you will be approved without wasting time. We're talking about days here, weeks, months, and even years of sifting through old, outdated information, scammy type, just stuff that doesn't work, people that don't have your best interest at heart. And you guys can also submit funding details into a funding submission form. That will be the fastest way. It'll land in my inbox. I'll evaluate, analyze, give you a proper response via email, and you'll be notified to check that out with all your options very thoroughly, personalized, customized, and broken down by myself truly, excuse me. But let's continue moving. So those services I've already mentioned, SBA type of loans, short-term, medium, and even long-term. You have those merchant cash advance companies, which is an amazing solution. All this stuff is down below in the description. If you're watching this again on YouTube, TikTok, go to the bio, and elsewhere, there will be room down below. So you also have business lines of credit. What are these? Now, this is instead of getting a lump sum, you can withdraw and use the funding as you go. So if you get approved for like 40,000 example, you don't have to use it up all at once. You can take out like 10K and then use it, pay interest on it, get a withdrawal fee. Or if it's not a withdrawal fee, you get a monthly fee if you're using it longer term. You only pay the principal and then on the balance. So it's like the principal and the interest, withdrawal fee. So I can help you with these numbers if you need help. But that usually ranges in the 600. So now we're kind of getting into that fair range. So all you need is a fair range score of a 600 to even qualify for a business line of credit for the most part. Usually 600s. Revenue requirements can vary. It can be a 10 if it's usually like with some online banks out there. I won't name some of them. But we can do that. We can do a 15,000. Some of them even require 20,000. So it kind of depends on who you're going to and what is actually going to fit your best needs. So as you're getting a clear picture here, it opens up the doors. So all these small business loans, all these business loans with good credit, I've just mentioned them. SBAs usually have the 3 C's. So they require good credit. They require maybe some type of a collateral to an extent. Depends on what type of funding, how much funding. It also depends on that. And then you have cash flow. So good credit with SBAs, collateral possibly, and then you have cash flow. And then with other services out there, they just require you to have, and even in bad credit situations, like a merchant cash advance, as I said, they can go as low in the poor credit range. But the more credit you get, and that's the overall purpose of this video, if you're falling in that good range, like I said earlier, it opens up more doors. And with the revenue in place, so we also look at revenue and we say, okay, do you have strong revenue? How's your cash flow looking like? And then we look at credit, for example. Again, we fall back into the example of, let's say you do 50K and you have a credit score of a 650. You're consistently doing 50,000 around there. So then you possibly qualify for 1 to 2x of your monthly. So we can get you from 50 to 100,000, 100 to 200% in other words. And so you're thinking, oh yeah, because you know this, because you spoke to me as the broker, this is what your expectation is, to get 100,000 because you wanted 100,000. You feel like you're going to get that. But your credit score over here, although it's a little bit underneath the good range, in good we're talking maybe 670. It won't possibly get you close to the 100K. It could, but realistically we have to look at not only your good credit score, and that's just, you're just below good. You're in that fair. But if you pushed it up into like a 670, it would definitely help. And then your revenue has to be strong enough. Deposits, cash flow, all these different things. Time in business does matter. So the more time in business, the more we can give you and the lesser of a rate you can get. So yeah, when you're in that good range, you can expect your rates to fall, your interest rates. If we're calculating on total payback, for example, of a 1.19 to a 1.69 is like what you would amount to what you get. So if you got between a 1.19 to a 1.30, that's usually because you're an A-paper lending client. That means you have at least a 700 plus FICO, and we're still in that good range. So if you have a 700 plus FICO, you have $50,000 plus per month within each of the last 3 months, 2+ years in business, then you're considered an A-paper lending client. and then we can open up more doors for you, lower the rate, fall between that 1.19 to 1.30 more or less, and then that will definitely help a lot, because your total payback would be less, and what's calculated at the end of that with origination fees, possible closing fees, not all, maybe possible application fees and so forth, it ends up being a lot less. So just kind of to wrap things up, and without going too in depth into like what are the underwriting details, that's going to be a different time. There'll be more content on this stuff down below, but what I can tell you is it opens up more doors to different services. Yeah, if you have a good credit score, 600 plus at least, and that's still in the good range, you can qualify for a business line of credit, but where's the revenue at? And we have to still look at other bits of details. 670 plus is a great thing, but if you don't have the time in business, if you're less than a year, if you have less than desired revenue, less than 50,000, maybe you're above 20,000 plus, then how much can we realistically give you, and what are the rates? The rate might be 1.30 to 1.49 at that point. But if you don't do 20,000 plus per month, but you have a good credit score, that doesn't necessarily mean you can get as much funding as you think. It just, you fall into a different category, and then you can get higher rates. So it's usually can be medium to high. So if you can't get those SBA loans, if you can't get these other ones, and everybody always wants those, but that's not always the reality. And when you apply to them, you never do end up getting them, because you don't understand. You don't understand the qualifications, what they actually look at, the loan officers, like I do. I get all that. I see the files, I understand what's happening, and it's not always your fault, but we have to be more educated on these things so we can make that decision. So that is going to conclude that in this video. But if you would like to learn how you can get up to 25,000 same day instant approval, and even up to 2 million incredibly fast funding without collateral, no hard credit checks, and even no interest rates, we're talking about minimum qualifications as little as a 450 plus FICO, with different top tier services from the best lenders out there, then I'll leave more information of that down below, how you can watch that content. All other forms of bad credit, good credit, how it all intertwines, what we're looking for, our underwriting processes, the lenders, myself as a broker, and how we all come together to help you get the best possible solution so you can continue to build, grow, expand, and even get out of a tight pinch. And if you have not followed or subscribed yet, please go ahead and do so you can get the latest information on all small business loans, real estate financing, investing, all different types of services, taking advantage of different opportunities online. Go ahead and do so. And if at any point you have any questions, comments, or concerns, please voice them out to me. I do take my time to respond as much as I can. And again, pick up those free resources in the bio, in the description, so you guys can get in contact, use this funding submission form. But hopefully you guys got a lot of value, and take care, everybody. See you guys in the new upcoming week. Talk soon. Bye.